Hi, welcome to this video update, which is on the 7th of June, or on Monday. We're just going to be looking at a simple trade setup that can really get you really low risk against high reward. And I'm going to go through the criteria that go into this trade setup and just illustrate it on a pair that we're focused on right now, which is USD CAD. Now, in terms of USD CAD, it's been on our radar for a few weeks. It hasn't done much, but it looks now to us like we're going to get a major trend reversal to the upside. Now, in terms of this trade setup, our risk is just over 2%. But if we get to our first target, our reward is over 8%, and to our second target, it's 13%. It's a really good looking trade setup in our view. What we're going to do is going to go and take a look at it right now. But just before we do so, please do keep in mind, of course, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video. You get live access to our member center. You can also follow our Facebook page, join our Facebook group of traders, and check out our recommended regulated ECN broker. Right, let's go and take a look at the trade setup. Right, USD CAD daily chart, and you've got a fairly gentle decline from the left of the chart, and then around April the 20th, you see a big decline, and now you've got sideways price action. Our view is we are going to see a rebound to the upside. I'll draw my levels of support and resistance in a moment, but in terms of this trade setup, the features of it, we like it because we're trading above a major monthly long-term support level. It's being tested and it's holding, and I'll just show it to you on the monthly chart. Just bear with me. The USD CAD month. Do that. What you can see is here, 120 level. You've got double bottom here on the bodies. It's back in 2015. A reversal on that tail there back in 2017. I've drawn another line which is just based on the two tails. So that's a kind of big support zone, okay? And at the moment we're holding it. We haven't had much action over the last few weeks. In the monthly candles, very small, sitting just really on the support level. Now, in terms, if we go back to the daily chart, we've tested it here. No volumes down here at all. Sellers, rebound. Same here. Low volumes, no sellers, rebound. Okay, now in terms of what we're seeing, after a big drop down, we're seeing volatility dropping and sideways action. You can see the Bollinger Bands getting really tight. That indicates a drop in volatility. If you look at the market, most of the media is saying, the USD should be going down. It's not going down, it's going sideways, okay? And low volatility. That could be indication that selling has ended. Now, we know that speculators are heavily short and smart money is heavily long, okay? Now, what I want to do is just want to quickly shoot over to another chart, which is the COT net traders positions, and show you how those groups are positioned. Right, we are on the COT net traders positions. Regular viewers will know this is one of our favorite sentiment tools, and it comes from the CFDC. They release these positions each week, and we're looking at two groups, okay? Commercials red, large speculators in green. We want to see what these two groups are doing against each other. Now, in terms of how you use COT net traders positions in detail, you can look up our video, which I think is called COT net traders indicator on our channel. Okay, give you the background to this tool. I'm just going to go through it briefly here. Now, in terms of what we're looking for, is the two groups, not interested in every twist and turn on this report. We've got the two groups to go aggressively against each other. The speculators, the big managed money, you can see they've gone heavily long of the CAD. Okay, this is the COT, so you've always got the foreign currency first. So we're looking at CAD USD. Obviously, we trade USD CAD, but it's giving us an indication that speculators have really ramped up longs. Commercials. These are hedgers. They've gone really aggressively short. Now, they're only going to aggressively move their hedges if they think prices have moved too far away from fair value, okay? They've got deep knowledge of the fundamentals, okay? They're not influenced by greed or wanting to make money because they're hedgers. They own the cash. They can't lose any money. When you see the two groups go aggressively against each other like this, it will normally break in favor of the commercials and break heavily in their favor. What we've got to be careful of is, we can, price can overrun the commercials in the short term. It doesn't matter to them, okay? They're hedgers, okay? For us, obviously, we need to have good money management. And in terms of this trade setup, we know speculators are heavily long. The CAD short the USD, but that big monthly support level is holding. So that's a great level to have our stop behind. Right, let's go back and take a look at the daily chart, and then we'll draw our levels of entry, stop and target. All right, back on the chart, and what I'm going to do now is draw my levels of entry, stop and target. Now, in terms of targets I'm going to use, they might look a bit ambitious, but they can be calculated by the spec money getting hit on stop. Okay, so we can look back on the COT previous years when we had such a big divergence as we've got now. How far could we go to the upside? Well, the answer is going to be 300 to 500 pips potentially. I'll explain these numbers in a moment, but let me just draw the levels. Double bottom on the tails above the 120 level. That's the line in the sand. You want to stop a little way back from there. I'm going to say 119.60. You've got obviously a move up here, down, but can't reach that tail. Nice blue, then a couple of nondescript candles. So draw trajectory in there. Okay, and the volatility really get low. If we go down, I think 120 will hold, but I think really, if you want to come in with a position, you can wait for that level to give way. A couple of bodies there, a couple of tails, another tail there. So basically, 121.35 will do it, I think. And then first target there. Okay, second target up here. So basically, you're looking for the sort of major sell-off to be retraced as the specs get hit on stop. So if we break out this low volatility, change to highest, specs get caught, should power us up to 124, maybe run on to 126. Now, in terms of a lot of people, when they look at trades, they talk about pips. Pips are irrelevant. It's how much you're risking against how much you're going to make, isn't it? That really matters. And in terms of this trade, the entry to stop, isn't much risk. Entry to target gives a really good payout free risk. You've got really good risk to reward. Let's just do it as cash. Okay, so I'm using no leverage at all. 0.75% risk to stop. If you get to first target, it's 2.9%. Second target is 4.6%. Now, in terms of the risk, we think it's a reasonable risk to take on this type of trade setup. We've got 2.25, so we're going to go times 3. So you've got 10,000 account. That means you're trading 30,000 in the market. 2.25% risk. 8.7 to first target. Second target 13.8. Okay, so this trade really ran the second target. I mean, it'd be a great one. I'm not saying it's going to, but I think, first target looks on the cards. And, second target, if we look back in the past, similar divergences on the COT have generated that sort of move. Now, in terms of this pair, I've been interested in it for a few weeks, but look at it, just drifts sideways. Okay, what's going to trigger some upside? Well, my own view is the big event for this pair, and USD pairs generally, could be Thursday, US CPI inflation data. Probably seen it in the media. Most analysts think the USD will go down because the Fed are saying, well, inflation is probably going to fade, it's transitory, we're going to provide ample stimulus, and we've got no plans to raise rates anytime soon. They've been saying that for a while. Inflation keeps going up. If you get an above forecast print on the CPI on Thursday, I think that could generate a big move on the USD to the upside, okay? And if we look at the most overbought major via the USD over the last few months, it's the CAD. So if the USD does rally, this is the one where the USD could really, really rally hard. Now, in terms of CPI, there is a good chance it's going to be above forecast, and that will basically be an event the market is not prepared for. Okay, if it comes in above forecast, the Fed are going to have to act. Okay, there's more about this on my Facebook page. There's two posts in relation to inflation and the impact on the USD pair, so you can check those posts out. But yeah, she doesn't want to go down at the moment. The volatility has dropped, breakout high volatility, and we can see a really big rally to the upside. And this is a setup, I really like, because it's easy to understand the logic behind it, and it really gives you good reward against the risk you're taking. If you got to stop behind the monthly support 119.60, it's not too much risk. If you're taken out, we're taken out, we're wrong. That's it. Okay. But I really like the look of it, and we'll see what happens with it. Been looking at it over the last few weeks. Like some people said to me, it hasn't done much, but I think it will this week. Hopefully in our favour. We shall see. Right, that is the video for today. Thank you very much for watching as usual. Take care. Have a good day.